My name is Mohamad Shafik Badaruddin. I'm the CEO and Managing Director of AmanahRaya Investment. We won two awards today. Two of our fund, which is AmanahRaya Unit Trust Fund and also AmanahRaya Syariah Trust Fund, has won awards by Morningstar.
Great, thank you. That's great. Congratulations.
Thank you so much.
Can you tell us a little bit about both the winning funds and how they were positioned with the themes that contributed to their performance?
Well, the fund has always been positioned quite defensively in this very challenging market. We have seen a rise in default risks in recent years. I mean, post-COVID. And because of that, we have tightened our credit check. We have a team of professionals that goes through these credit checks on ongoing basis. And we have always structured the fund in such a way that it's well diversified. And therefore, we are not exposed to any sectors of the economy or you know, and then on the other side, I mean, we also try to demand when we negotiate with issuers when it comes to what return we are expecting. So those are some of the basic strategies that we have in place.
Great. Would you say that that's the same types of strategies that contribute to the long-term success of the fund?
Definitely, yes. I would say pretty much we have maintained our strategy. We have maintained the same investment process that is quite repeatable over a long term. Even if the team changes and all, our process still remains the same. That is something that I can assure investors of. I do not see any reason why we should do a sudden change to our investment strategy. That strategy has worked well for us in the past, and definitely we would just maintain it. It's just that probably with the prevailing changes of the market condition, we would definitely, you know, do some tweaking a little bit here and there. When it comes to duration, when it comes to the allocation within the fund itself. But the base of the strategy still remains the same, because obviously it all centered or it all refers to the same policy that we have been using for years.
Right. So could you say what this policy is? That's not a secret.
Well, our policy, it's more of our belief. Our belief centered on the fact that we think market is inefficient. Inefficient in the sense that this efficiency creates these multiple alpha opportunities that, due to securities mispricing. So because of this mispricing, there lies all these alpha opportunities, and when we get our exposure into these opportunities, over time, we believe that the market will fairly price these securities, and that's where our alpha comes in.
So now let's just pull back a bit and
Okay.
talk about this year, 2023 year. What is your, outlook on what this year is going to bring?
Well, the year 2023 would still be pretty much a challenging year. Things would still remain volatile as it was in 2022. Except for this year, we are expecting a peak of rates sometime in the first half of the year, peak of inflation as well. So once we have gone past that, definitely we're going to have to reassess our strategy, whether there is a need for us to rebalance back our portfolio. But for as long as that base scenario remains the same, we would probably maintain our portfolio duration for now. Our portfolio yield also remain quite high. It's always based on this yield chasing strategy, but it's always has been a quality yield instead of, just a high yield.
What do you say would be, could you tell us a little bit about the challenges for the past 12 months?
12 months definitely has been very challenging, especially when you have this rise in interest rate. The rise in interest rate was, the magnitude of the rise is one thing, the direction of the interest rate is another thing, and the speed of the increase was something that we haven't seen in the past. Probably in like 40 years kind of time, inflation was high in 40 years. very challenging market for us, but we were lucky in the sense that we were very adaptive to these changes, and we were able to tweak our portfolio strategy fast enough that that saves a lot of investors' money that we are looking after.
That's what got you guys the award.
Yes, definitely.
Okay, so finally, do you have any words of advice or maybe some market trends you look up for investors?
Well, I believe bond investing still remains one of the best investment there is today. We would advise investors to remain calm. That's number one. Number two, always be invested. I have nothing against market timing, but I would advise investors to be invested, because we don't know when is market going to turn over, right? When is the inflection point? If you lean your strategy to market timing, probably you get it once or twice, but not every time. So be invested all the time is probably one of the best strategy that I've seen. We have investors who are, been sticky with our funds for years. They have been reaping all these compounding effects. They have always been invested through the boom and bust of the market, and that has worked well for them. For staying with the fund for years.